So good evening once again, guys. Thank you so much for joining in. I know it's a bit late, but the fact that you're all here shows a willingness for everybody to learn or improve their trading. So without further ado, let's just get on with our lesson today. We are going to be looking at the Fibonacci tool. Specifically, we're going to look at the Fibonacci Retracement Tool. So what we're going to look at today is how to use the Fibonacci Retracement Tool. We're going to go through a bit of theory about it, and then also we're going to look at how to plot it on the chart and how to use it in our daily technical analysis. So the Fibonacci Retracement Tool is a very popular tool that's used in technical analysis by so many traders in order to predict future price movement in the market. If you use it correctly, the different levels on this tool can help us to identify upcoming support and resistance levels based on past price action. The retracement tool normally measures how deep the pullback is after an initial move. So if you have been here and attended the market structure class that I held, I think about two weeks ago, we went through how to analyze the market structure of a chart and how to read the trend. And so when the price is trending, or when the market is in a trend, let's say an upward trend, the market will move higher and then pull back, and then continue to move higher and then pull back, and then continue to move higher and then pull back a bit. So this Fibonacci, and I'm going to show you that just in a small illustration. So this tool measures how deep the pullback is after an initial move. It's also important to note that the Fibonacci tool is a confirmation tool and therefore should be used alongside other technical analysis tools. For example, you can combine it with the Japanese candlestick patterns. You can combine it with trend lines, support and resistance, moving averages, pivot points, whole numbers, or even oscillators. So whenever you want to use the Fib tool, remember that it's a confirmation tool and therefore it's best used alongside other technical analysis tools. And also the other important bit to note about the Fib tool is it works best when the market is trending. It will not work for you if you apply it to a market that is ranging or consolidating. It works best when the market is either in an upward trend or a downward trend. And so when we say that since it's a confirmation tool, it's best to use it alongside other technical analysis tools, it means that the more confirmations you have as you're looking for a trade setup, the stronger your trade signal will be. Okay? And so if you're using, if you want to make a trading decision and you get to your charts, you're going to look out for the trend, and then you will, if you see it's trending, then you will attempt to use the Fibonacci tool. And so you will combine it, let's say, with a moving average. So if you realize that price is pulling back to a Fibonacci level, and it's also bouncing off a moving average, okay, or probably a trend line, that will be a stronger signal than just using the Fibonacci tool alone. And also do not fall into the trap of assuming that because price has reached a Fibonacci level, that the market will automatically reverse. No. Sometimes the market may fail to reverse. And that is why we combine it with other tools, because there are different levels of the Fibonacci tool as we're going to look at it. And so just to explain a little bit about how it helps us identify how deep the pullback goes, let me just pull up a whiteboard here. And so let's assume that this market is in an uptrend. Price goes higher and creates a higher high, and then it pulls back a bit and creates a higher low. If you're already a trader, you should be knowing this. Is everybody seeing my whiteboard? Feel free to type a Y in the chat section. So price continues high and creates a higher high, and then it pulls back a bit. Then it continues higher, creates a higher high. So this is the first move, the initial move, and then this is the pullback. And so price moves high and creates a higher high and then pulls back. So this is a pullback right here. This is a pullback right here. And this is a pullback right here. So remember, if price is an uptrend, thank you guys in the chat. If price is in an uptrend, it means we're going to be looking for buy trade signals. But we want to buy at the best possible price. And so the best points to buy from are the pullbacks. However, when price pulls back, we don't know how far deep it's going to pull back. The Fibonacci tool normally helps us identify where the pullback has stopped. And once we see reversal candlestick patterns at these pullbacks, also at the Fibonacci levels, then that would be a good point to enter a buy position. And so this is where the Fibonacci tool normally helps us in, to identify how far the pullback will go and where the pullback will stop, so that price reverses and continues in its trend. Okay, so I'll just pull up a chart, and then we can be able to see exactly how to plot this tool. However, one thing you should know that it's not guaranteed that this tool will work all the time. If it would work all the time, then this would mean that it would be the holy grail for Forex trading. So you have to be cautious every time you're using it. And that is why we say you combine it with other technical analysis tools. This is a market that is trending downwards. And so like we say, the first thing you're supposed to do is to identify the trend. So when you look here, what we are seeing is lower highs and lower lows. Lower highs and lower lows. I'm sure if you're a trader, you can easily see this, especially with the help of this downward trend line. You can clearly see that this is a low right here. And you can clearly see that price pulled back and created a lower high here. Price pushed lower and created a lower low here. And then it pulled back and created a lower high. So price pushed even lower and created a lower low, and then pulled back a bit and created a lower high. And so I'm sure now you can get the idea that this is a downward trend. And so how we use the Fibonacci tool is it's going to tell us exactly where the pullback ends. In this case, we already have a trend line in place that is showing us where the pullback is ending. And so it would be a good fit to also apply your Fibonacci tool in this case, because the more confirmations, the stronger the signal. How the Fibonacci tool helps us is to identify how far the pullback will go, okay? And now, since it's a downward trend, we would be looking for sales at the pullbacks. And so once you have realized, let me first remove this Fibonacci tool once again. Once you have realized that, okay, now it's a downward trend, I'm looking for sales. That is the first step, by the way. You need to have a bias. And the first thing to do is to analyze the chart and identify the trend. So in this case, you have already identified that the trend is a downward trend. And so when you're running your Fibonacci tool, you're running it from one swing high to a swing low, the obvious swing highs. And now I know that we as traders might plot the Fibonacci tool differently because our eyes might see different things. But there are some points that are really obvious on your chart. For example, if you look at this chart, you can clearly see that this is a lower high right here. This is a lower low right here. Price pulled back and created a lower high. So these are the first things you're supposed to identify first before you even plot your Fibonacci tool on your price chart. So when you pull it, the Fibonacci tool is this small symbol here with a letter F. When you place your cursor on it, clearly says draw Fibonacci retracement. And so once you click on it, and then you come, click here, but leave your finger on the left click, like long press it down, and you drag it. So you're dragging it from the first lower high to the lower low, right there. Okay, and so the commonest retracement levels that you would be really interested in would be this one right here, the 38.2, the 50%, the 6.8, and the 78.6. However, there is what we call the golden ratio, which is normally the area between the 50% and the 61.8. If you move to your chart and you do a bit of backtesting, you realize that most of the pullbacks normally end at that zone. But you cannot be 100% sure that that's what will always happen. And so that is where we normally combine the Fibonacci tool with other technical analysis tools. So you realize in this case, we are combining the Fibonacci tool with the trend line, okay? So price created a lower low here and then retraced. So when price retraces, what we are looking out for is one, the Fibonacci tool aligning with the trend line, aligning with Japanese candlestick patterns, bearish reversal, bearish candlestick patterns. In this case, you can clearly see that there's a doji here with this bearish candle. It can also be a bearish engulfing candle. Okay, so we have combined three things: the Fibonacci tool, the trend line, and the Japanese candlestick patterns. And so right here, it would now tell you that, okay, price actually has not closed above the 50% Fibonacci level. And I see price has rejected that zone. It has rejected the 50 Fibonacci level. It has rejected the trend line as well. And it's a bearish reversal candlestick pattern. So those are three confirmations right there. And also, you have already identified that the trend is a bearish trend. So the more the confirmations, the stronger your trade signal. So now here you would enter this trade with a lot more confidence than just having one confirmation. And so you would enter your trade right here using the Fibonacci tool, using the trend line, and using the candlestick patterns, and enter a sell. So that is one way of using the Fibonacci retracement tool. Okay, and mainly really to tell us where the pullback is going to stop. The application of the tool, first of all, one thing you need to know is it works best in a training market. Two, it's best used alongside other technical analysis tools. Can be alongside Japanese candlestick patterns, can be alongside moving averages, trend lines, support and resistance, oscillators, and name it. And so in this case, I'm just taking an example. When you're drawing the Fibonacci tool, you're going to draw it from one swing high to a swing low. An obvious swing high to a swing low. And in this case, I'm saying from a swing high to a swing low because this is a downward trend, okay? And the Fibonacci tool helps us identify where the pullback is going to stop. So because this is a downward trend, you're drawing it from up to down. The Fibonacci tool is when you come to the toolbar up here, is the one that has a letter F. You click on it, you just click on it and then you come to the first high to the high. Okay, let's say the market was actually around here. So you would come here, click here first, the first high, and then leave your hand on the left click, and then you drag to the low. So this pullback here, the Fibonacci tool is now helping us to locate where this pullback is ending. And so when this pullback happens, we are waiting to see where the pullback is ending so that we can enter a sell position, anticipating that the market is going to continue lower. So when the market pulls back, we are not sure exactly where the pullback is going to end. The pullback could end at the 38.2 level, because these are the commonest levels. 38.2, 50%. It can pull back to 61.8, can even pull back to 78.6, but you're not certain exactly where. And so this is why we normally combine it with other technical analysis tools. In this case, we have a trend line in place because it was, it's viable enough in place there. So when you see that price is rejecting a level here, and actually when you look here, price did not close above the 50 level. However, it rejected the 50 level with this bearish candle right here. It can be a bearish engulfing candle, or it can just be a doji with a bearish candle as confirmation for price to continue down. However, it is also rejecting this trend line. So there are three things here: the bearish engulfing candle, the rejection of the trend line, and the rejection of the Fibonacci level, the 50% Fibonacci level. So those three confirmations are strong enough to give you enough confidence to enter a sell position right here. And so once you enter the sell position here, so one of the things the retracement tool helps us in is identifying where the pullback ends, and also it helps us identify where we can take profits. So say, for example, in this case, if you had entered here, your take profit one would be at this zone right here, at the 0.0% zone. Your take profit two would be at the negative 27 zone. And if you're really, let's say, really a swing trader and you're holding on to this trade, your take profit three would be at the negative 61.8 zone, just like you see them here. So all these points are enabling us, they're telling us in our minds that price can possibly get to these lows, and I can be able to make more money as price continues down. Also, we are able to know that at any of these zones, at the 0.00, negative 27, negative 61.8, there might be a reversal. So if I'm still in a sale, I should be able to take profits at these levels, really still in this trade. So that's basically it, guys. Maybe the other one thing I would like to say is it's not a perfect tool because as traders, we use it differently. Our eyes read the charts differently. So what I might see as a lower high may not be a lower high for you. And that is why I say you use it on the obvious swing highs and swing lows. But you have to still use it alongside other tools, definitely. And also you need to have your risk management in place at all times, because it's not all times that these retracement levels will hold. Sometimes the retracement levels may not hold, and price might break through. And so while retracement levels give you a higher probability of success, like any other technical tools, they may not work all the time. Remember that trading is always about probabilities. And so whenever you're trading using the Fibonacci tool, combine it with other tools to create the highest probability trades. That's it about the
Maria,
Fibonacci Retracement Tool. Unless there are any questions, that's the end of the presentation today. Thank you, guys.
Maria,
Yes.
I was asking, what's the
Mm,
best time frame to apply the Fibonacci?
so the Fibonacci tool can be used in any trending markets. So this it's not necessarily, you don't necessarily have to use it on any particular time frame, as long as it's a trending market. However, this is always my advice, that whenever you get to the charts and you're identifying the trend, do so from the higher time frames. But then you're also going to realize that, and I'll give you an example. Let's say price is continuing down. This is an impulse move. An impulse move is the long leg in the direction of the trend. Whenever you see that price is continuing down in this impulse move, and this is a daily chart, on a daily chart, when you go down to the lower time frames, to the 1 hour, to the 30 minutes, you're going to realize that there are other lower highs and lower lows happening. There are other waves that are happening on the lower time frames. Okay. And so for me personally, the way I trade using the Fibonacci tool, I will draw up my zones, and then I'll go down to the lower. I'll draw the Fibonacci tool. I normally use it on the daily and on the 4 hour. And then once I have identified my levels, then I'll go down to, let's say, the 1 hour, because for me, I normally enter on the 1 hour. And then I will look for entries at the Fibonacci levels on the 1 hour, having last drawn it on the 4 hour, if that makes sense. However, you can use it on any time frame, as long as you can see a clear trend, as long as you're trading in the direction of the trend. Because within the bigger trend, there's always waves on the smaller time frames.
Thank you very much, Maria, for today's presentation. I think it has been a much needed one. Wish you all a good evening, and thank you once again for making the time to be here and making today's class very interactive.